Welcome to Upside, where every week we dig into the real news that goes on behind the headlines affecting European venture. Today, it's Mads, myself, and Ben Prade. Ben is an investor and operator from the firm Bullhound Capital, which is the investment arm of GP Bullhound. They're an advisory business and growth investor based in 13 countries with 120 staff. Ben, I hope I'm doing you proud here. You can always chime in anytime you like. Chime in anytime you like when I get it wrong. Ben focuses on deep tech, AI, quantum, and space, as well as dual use. Previous investments is pretty much the who's who of everybody there is in household names: Klarna, Spotify, Revolut, Slack, and all the cool shenanigans. Now, on this week's show, we have the VC funding environment. Ben, I think that's one of yours. We're going to lean on you for that one. Nobel Prizes, and one in particular, what that means for Europe. What's going on that's creating all the talk of AI bubbles. Terror from China. And the $1.5 trillion chasm between the US and the EU. Gentlemen, how the heck are you? Ben, kick off. What's new with you? How are you? Tell us good stuff.
Yeah, all very good. Thank you very much for having me back, guys. I love the podcast. I'm a follower every week. So things are good. You know, it's that kind of time where we're kind of on the swift downhill into Christmas, trying to get as much done before the end of the year as possible.
The middle of October, man.
I know. It goes quick these months, right?
True.
Dude, it's half term. It's half term. It's half term tomorrow. Yeah. You get 2 weeks of that. When you're back, it's Halloween, and then there's a month to December.
Yeah.
2025 is practically over.
Yeah. Unbelievable.
It's nuts.
Unbelievable. Yeah.
What the heck? Mads, what's cooking with you apart from planning for Halloween and half term? I've got you.
Well, absolutely. And Christmas parties and this, that, and the other. No, I mean, look, deals to be done. You know, we're hopefully closing a deal tomorrow. Super exciting. Something we've been working about and on for months. So looking forward to announcing that in due course.
Yeah, one of our biggies. I'm excited about that. Anyway, enough about us. Let's talk about, in fact, Ben, this is yours to kick off. When we were planning the show, one of your points was an intrigue or a share, I guess, around the fundraising environment. Now, many of our listeners are founders and many are in our VC ecosystem. But this affects everybody. So what's your insight take on the fundraising environment?
Yeah, so I guess in my role, I do tend to take on a lot of the fundraising responsibilities for the group. And, you know, it's a roller coaster ride, as always, with fundraising. I mean, I think people always kind of underestimate the importance of fundraising in our business. I think we probably all do a lot more fundraising than we care to admit.
Always be fundraising, baby. Always be fundraising.
So, yeah, I mean, down the years, lots of interesting learnings, really. I mean, we know that there was a big pullback after the kind of the hype of 21, 22. And I think, you know, what's really shocking still is that there is less and less money coming into VC generally from investors.
Still?
Less funds. Yeah, less funds being raised, less funds out there. Generally, what you're seeing is there is, I don't want to use flight to quality because that's not fair on emerging managers, but there's maybe a flight to brands people recognize a little bit more. So at least, you know, 25% of all new funding goes into the top 10 brands. I think 75% of all funding goes into the top 30 brands. So really then emerging managers and other kind of more experienced managers are fighting it out for the last 25%. I think probably there was too many funds after that boom in 21, 22. So, you know, a thinning out of the market probably isn't a bad thing, but it's definitely bleak out there. And I think, you know, one of the things I was going to bring up is that, you know, different sources of funding are coming into our market, and sometimes they come with different implications. You know, I think a lot of funds in the US, when they're raising money from institutions, you know, those institutions trust those brands. They like the venture capital risk. They are happy to give managers money and for those managers to go out and do what they do best. But we're seeing a lot more in Europe, you know, that the work that the European Investment Fund has done has been fantastic over the last 10, 15 years to stimulate VC. But, you know, as more and more government money comes into the sector, you have countries that want to have an impact on their own local technology ecosystems. sometimes that money comes with strings attached. Sometimes it comes with policy goals that maybe don't align with all good investments, and so sometimes the European ecosystem kind of suffers a little bit from the goodwill of governments that want to support the ecosystem, but sometimes that is you run into this issue of the tail wagging the dog. Funds need the money. I was at a conference this week, defense conference actually, and somebody
of course
stood up
it was.
It's the hot topic. Somebody stood up and said, well, look, VCs these days, they don't have any risk appetite.
Really?
And I think, the people such as yourselves and us, the risk appetite is there. But a lot of the time, if you're going to go and raise a fund, you're going to have to raise a fund in a certain way to be able to get that money in. And sometimes the money wants certain things. So I think it is a bit of a situation that we need to deal with. You guys have talked a lot about accessing true private capital in Europe, and we won't kind of open that can of worms again, but about pension funds just not investing locally and not having the skills and the understanding to invest in tech. But it is, it's critical. It's critical for us, isn't it? The other thing, of course, is DPI. I know you guys have talked about this as well. DPI is money coming back to investors that have invested in our asset class. That is probably still not as much as people would hope. So there is a lot of money gummed up in the system that needs to come out. But, there are chinks of light. We're seeing the Klarna IPO is a great moment for Europe. Many, many funds across Europe and family offices and individuals are invested in Klarna. So once that lockup comes off and, the share price is holding up reasonably well, there'll be liquidity coming back through the system. So that should be good. So it's, interesting times. I think, that a lot of funds that shouldn't really have been in our sector are being weeded out. So I think the quality will remain. So the future is bright, but there are issues to deal with.
Well, we are called Upside, Ben. So I love you for finishing on that little upside. Mads, before we move on to the Goldman's purchase, any reflection, because you're obviously out and about meeting LPs, any reflections from you on the fundraising environment?
There's obviously a lot of capital that's coming into technology broadly right now, and a lot of that is going into AI. We've seen some of the rounds that are being raised by the OpenAIs and Anthropics and XAIs of this world, and they are absolutely massive. And I suppose to some extent that might be crowding out other things because everybody wants to chase, as Ben says, these marquee names, these massive, massive brands. But we know that there's going to be value created in many, many places. And so to some extent, it's probably a good thing because that means there's, everybody's chasing these few big names and as all that capital is going in there, there's a little less focus on some of the gems out and about. So actually, I think there are a lot of amazing investment opportunities right now if you take the time to work, if you're not worried about rolling up your sleeves and knowing that it's not about just writing a check. You're going to have to do some work to support the founders, support the entrepreneurs to build good companies.
Yeah. And my sense is, now we're in fundraising mode as well, that the conversations we're having this time around are a lot more open and fluid. It feels like there are more people in Europe that are willing to have conversations around early stage venture and the innovation, these early pieces. So I think there is, and I'm going to also be a bit upside-esque. And I think there is a little bit more intrigue and appetite around AI and defense and resilience and all these conversations that are going on around Europe, which I find actually quite positive, even though it might be happy ears. We will see. Now, we're going to actually, before we go into the Nobel Prize piece, the other thing that was on your mind, Ben, was this Goldman's purchase. So Industry Ventures has just been bought or acquired. Now, I was looking behind this, nearly $1 trillion, 965 million, billion. So, but 300 million appears to be contingent on future performance. So I'm not quite sure what's cash, what's not, what's what. But why was this on your mind, Ben?
Well, I thought it was interesting because, it's the more traditional finance industry getting more involved in our industry. So, they play an important part in the ecosystem, Industry Ventures. They are a secondaries fund. So, by definition, they're buying other people's stakes in VC funds.
They're not just secondaries, though, are they? They're fund of funds. They do some direct, but they're known as a secondaries fund. Is that fair?
That's right. Yeah, I think so. Yeah. I think it all adds up to creating liquidity for the industry, which is a good thing. I mean, these groups are known for pushing quite chunky discounts. So, when you're looking to find some liquidity, they're not going to be doing you any favors, but that's fine. That's the business model. But what's really interesting for groups like Industry Ventures is that, they have 700 funds on their books. They are investors effectively in 700 different funds. Below those funds, there's 10,000 underlying company holdings. So as investors, of course, they're picking up all the data, all the quarterly reports from these funds and the progress.
Is that what Goldman's wants, do you think? Is that the angle? Because there's two for me. One is them getting into alternatives, as in into venture and other. But do you think it's the data piece? Where do you think the angle is?
Goldman's are super smart, right? I think it is a data piece as much as anything, but I think what that data really activates for them is the ability to price lots of private market companies really accurately. And also, as we talked about a little bit earlier, a lot of money is stuck in VC. A lot of maybe high net worths came into that during the boom and are looking for liquidity. Some of these funds are up quite nicely, so are happy to take a small discount. And so for Goldman's, that has a very active wealth management division, being able to offer this as a product to their clients, as we can kind of clean out any illiquid products you've got stuck in your portfolios and allow you some cash to invest with us somewhere else. I think it's a fantastic move. And I think the price is relatively modest. I think it's a great deal for Goldman's, and it's a great deal for the guys at Industry Ventures too. But I think it is a really interesting indication that, the big boys are already looking at this asset class and saying, this is something we want to get involved in.
Well, let's see if there's any more purchases going on. I was keeping an eye on fees, and it looks like obviously all the big banks are rinsing the fees at the moment. Maybe there's more to come from being in this asset class as well. Now we're going to change gear. We're going to go, super sideways. I don't think we've ever spoken about Nobel Prizes before, but there is method in the madness, and we are going to talk about Nobel Prizes. And no, we're not going to talk about Trump not winning one yet. This week, the prize awarded for economics went to, and I'm gonna bastardize their names, I'm sure, Mukir, Aghion, and Howitt. Now, Mukir only took a half of the prize, and Aghion and Howitt split the other half. I don't know how that works. Do they chew the medal in half? I don't know. But their work is all about explaining innovation-driven economic growth. So why are we talking about that here? Because they've unpacked the role of innovation, governments, VC startups, and incumbents. And obviously, there is a massive highlight on all of that around the challenges facing Europe. But I'm going to lean on you, Mads, because you have unpacked this. Why are we talking about economic Nobel Prizes?
Yeah, it maybe feels a bit esoteric, but it's actually very relevant to what we do in venture capital. Now, Mukir, let's sort of put him to one side. He identified some of the prerequisite for sustained growth, sort of going back to more of the Industrial Revolution, the Enlightenment, and what was it that made Europe a fountain of innovation and economic growth at the time, whereas the Aghion Howitt's model is much more relevant to modern times, kind of this creative destruction, where they're talking about firms investing in R&D and how that creation destruction means that new technology is displacing old technology, and that leads to continuous growth. And in many ways, they provide the first rigorous mathematical proof for why growth is driven by these incentives in the economy. It's not sort of something that falls like manna from heaven, or something that is, Schumpeter has been talking about creative destruction for a long time, right? For decades before these guys came along. But they now bring the mathematical proof, and that's why they've won the Nobel Prize. To some extent, you can say this is the theoretical foundation for venture capital, right? It sort of validates why it works. That's not news to people in the industry, we know, but they've now proven that it works. And it's this mechanism that channels the capital. And that is in many ways why governments all over the world are trying to stimulate R&D and venture capital, because these things are essential for growth. Now, if one was to criticize the model, kind of what are they missing? Well, to some extent, you could say maybe the state's role. Forgive me, maybe this sounds terribly European, but if you look at some of the big innovations, let's take the iPhone, almost all the technology in the iPhone, the foundation was laid with government investment. So whether it be the internet or GPS or touchscreens or even semiconductors, right? So much of that came out of government money, government R&D, or government procurement. And then the private sector invests after the state de-risks some of these innovations or inventions with patient capital. Now, the Aki and Howard model is a little bit quiet on that, but I think we can see in reality that those things are really, really important. So I think kind of economic theory is not stopping with this Nobel Prize. There's much, much more to both sort of document and discuss. Another critical gap is kind of in their model, they talk a lot about innovation and innovation driving growth, but a lot of the late industrializing countries, like a South Korea, like a Taiwan, they didn't necessarily innovate initially. There was a lot of learning and leaning on existing technology and then innovating later on. And the sequence really matters there. And then I would say finally, China, because China is a little bit the bull in this Nobel Prize China shop. They've demonstrated that economic growth is about innovation, but not only about innovation. They've managed to grow their economy phenomenally with a combination of infrastructure investment, it kind of be the bridges, the roads, the house building, which they've done massively, and a lot of innovation at the same time. Where you could say some of these classical economical models might say, look, it's all about innovation. Don't worry about investing in all the other stuff. The Chinese model was very much, well, we'll do both. We'll do both really well. And what they've demonstrated is when you do that, you can come out in some ways on top. If you look at robotics, for example, China today, just 15 years ago, people were thinking about it as a low-cost manufacturing hub. Well, guess what? Where do you automate? You automate when labor is expensive. Well, today, China's got 5 times as many industrial robots per capita as the UK does. Okay, and it's also a much larger country. If you look at AI, their innovation is incredible. The top 5 open source models today are all Chinese. They've got dark factories that are terrifying some Western execs. Maybe we're going to unpack that in a bit. So I think to some extent, whilst we're looking at this Nobel Prize here and these economic models, I think there's a lot of insight there, but I maybe also think there are some things they're missing a little bit in their model. And I think as we think about how Europe can regain leadership and get back on the growth trajectory, it's important not to forget some of those lessons.
Well, yeah, we are definitely going to slightly unpack the terror and fear felt by some Western executives that visited some Chinese factories. But before we go there, Ben, any thoughts on, did you see the Nobel Prize? Did this catch your eye this week?
Yeah, I mean, it's really interesting to see economic theory coming up like this. I think it's wonderful. I mean, I did economics at university, and it's a subject that doesn't get talked about very much at the moment. The theories are quite qualitative as well. It's quite opinionated. And I think it's brilliant to see it up there and for everyone to be really reminded of the basics of how economies work and what it's all about. But I think we live in a time where there's ample opportunity for development. And I think, AI has created lots of new industries at the moment, but it doesn't seem to be moving mankind on that much so far. Obviously people are kind of reaching for the low-hanging fruit when it comes to developing business models. I saw this week or just today that Mistral is developing a group of AI-powered science research, which sounds really exciting to me. I think it's wonderful that groups can start really applying AI in deep scientific research. It doesn't necessarily have an automatic financial benefit to it. And I think, that's one of the great things about Europe is that we still do research for the benefit of research to move us on as a species. It's not all about new businesses and listing on stock exchanges.
So we need the money, Ben. We need the money. Show me the money. Give me the money.
Yes.
Maybe there is a deep tech, which I'm assuming there's a deep tech angle to the Mistral work. We're going to talk about AI bubbles, but we're not going to talk about AI bubbles. There are so many stories, and I guess we will see this will rinse repeat. This AI bubble story will rinse repeat in the news until there is some form of correction or crash. But what we thought would be interesting would be to look at some of the facts that are fueling the stories and some of the AI assets and facets that are actually creating some of the dialogue. So OpenAI obviously spoke this week or last week about having 800 million users. They released Sora, Agent Kit, and other more enterprise-focused toolkits. And one thing that also hit me between the eyes was it feels like Sam Altman is building the app that Elon Musk has always wanted to build, this everything app, this ecosystem. So between him and Johnny Ive's pendant, or whatever that hardware ends up being, and all of these applications that live inside ChatGPT, it feels like this is going to be an everything app. So here are some of the other facets that kind of caught our eye that I think I'm going to ask you, Mads, to dig into. So we've got AI and the investor buyer partner circularity challenge. I know we've spoken about this before, but have a look at that. The real Chinese threat using open source, the energy that's required to fuel this next AI boom, the AI monetization attempts that are going on with Walmart, Wendy's, Target, and other more American outfits are now starting to try and monetize AI. So many questions around this. But before we do that, Mads, how else would you tee up the topic of what's going on with AI that's creating all these conversations around bubbles?
But you cannot talk about AI without talking about OpenAI right now. Sam Altman, he is absolutely going for it. And we've seen that over the space of 3 weeks, he have made a $1 trillion bet. It's, a trillion here, a trillion there, right? Suddenly it becomes
change,
real
baby.
Money. As a technologist, as somebody who is excited about what tech can do for us and how it can change the world, you can't help not being excited by the scale and magnitude of this. So he has announced over 3 weeks about 30 gigawatts of new compute capacity to be rolled out over the next few years. Partnership with NVIDIA, about 10 gigawatts, right? And a $100 billion investment. AMD, a 6 gigawatt partnership. Broadcom, another 10 gigawatt partnership around custom chips. And then you have the whole Oracle and Stargate piece, which could be, 5 to 10 gigawatt there over a 5-year period. So we're talking about investments of well over $1 trillion over the next decade. It's just staggering. And to put that into context, it's about half as much power, just under half as much power to power this compute capacity as all of the UK consumes. Okay, so take 30 to 35 million people is the power that we all consume over the course of a year is what he is gunning for, saying, I need that capacity to deliver the compute that I need to take on the projects, the challenges that I want to solve. Ben, back to your point about core science, imagine what that scale of AI will be able to help us unlock. And of course, the skeptics are saying, well, is this just about kind of memes and silly videos? I happen to think there's going to be a lot more to it than that. Although hopefully there'll be some humorous stuff mixed in as well. We also need some of that stuff. But we're talking about 20 to 30 new nuclear reactors worth of electricity. This is staggering. Now, his strategy is to leverage other people's balance sheets because he ain't got the money. And this is maybe what we can unpack a little bit when we look at who the two Goliaths are on the scene here, because it's OpenAI on one side and it's Google on the other side. And they have been sort of in this quasi-price war where both are pricing similarly now for the top end model, but Google can sustain that. They can sustain something that is massively cash bleeding for a long time because of the money printer they have in the basement from their search business. Now, at the same time, the main threat to Google's business is OpenAI monetizing ChatGPT via ads and stealing Google's ad business. And so the question as you line this up is, will Google be able to be predatory enough to push OpenAI AI enough that they can protect their search business and their search revenue? Or will OpenAI be able to snaffle away ad dollars from Google and really hurt them? And right now, there are two Goliaths here. It's really hard to say with certainty who's going to win because yes, Google's cash flows are formidable, but so is Sam Altman's ability to do alliances, as we've seen, to strike these deals and raise a phenomenal amount of capital. So it's a really, I'm going to get out the popcorn, guys. There's showdown coming.
Yeah, really, for sure. So Ben and Mads, I'm going to come back to you in a second because I want to talk a bit more about some of the other aspects of this. But Ben, without having a bubble, no bubble conversation, if possible, but maybe we should. But what else is on your mind on this topic?
Well, I guess everybody's talking a lot about the deals being done between the big players and this circularity. But, I don't think there's anything new about circularity in industries. We've seen vendor financing operating successfully in many industries. I mean, the whole car industry is built on vendor financing. Most people don't own their own cars, and ultimately the company that sold you probably does. So I think as long as the financing arrangements are reliable, I think, what always causes blow-ups in most financial situations is people taking short-term cash and putting it out on a long-term basis. So if this vendor financing, or if one company is investing into another company, as long as that capital is safe and doesn't need to get drawn out at short notice, then, interdependencies like that are fine. I mean, for me, the problem is the revenue expectations. All the numbers can add up, but one thing you can never control in these markets is the expectations of humans, of investors. And if people's expectations of revenues and what AI will do in the shorter term runs out of line with what is actually going to happen, then that's when the problems start. And then if these businesses are interconnected through various financing loops and equations, then, some kind of correction could be even harder than it would normally be. But personally, I think from our point of view, we don't see AI as one thing. AI comes in many different layers, and it's not just about open AI for us. There are lots of industries being built on top of these companies that are super, super interesting for us as an investor. And the more verticalized AI companies become, AI offerings become, and start helping us in our everyday life, both at work and at home, I think those companies can really build lasting models that are very successful. So for us as an investor, we're kind of closer to this space where you've got SaaS companies with data that are becoming AI companies. And that's really interesting for us, because if you look at this kind of bubble kind of narrative, yes, AI companies are trading very, very expensive. But traditional SaaS companies, the multiples they trade at haven't changed that much, really, over the last 2 or 3 years. And there has to be at some point a coming together between the multiples that SaaS companies trade at and AI companies, because ultimately everything will be an AI company in the future. Every company will use AI the same way every company uses internet. So there is an arbitrage there for us as an investor to say, well, which companies are really going to benefit from these changes, and thinking a bit longer term. But yes, in the short term, expectations do drive markets, and it could be a bumpy ride.
This is super interesting, Ben. I mean, just to switch a little bit to inside baseball, because I think it's when you analyze this stuff at the unit economics level that things get really, really interesting. The difference is that whereas SaaS had, people were complaining about SaaS because you had high CAC and kind of there were all the SG&A that sat on top. You had pretty good unit economics, right? You had gross margins that were quite high, and that's completely different here. If you look at Anysphere, if you look kind of the cursor, right, for every time they earn $1 revenue, they'll pay that dollar straight to Anthropic, and that's not covering any overheads. Anthropic will then turn around and pay $1.50 up to one of the hyperscalers, and the hyperscalers will then turn around and pay, 12 to $15 over to NVIDIA and CapEx. So yes, right now, all the money, all the dollars are ending up with NVIDIA, and then they're sort of recycling them back in the system. And you're absolutely right. We've seen other models where that's done. But I think the challenge is you've got the negative gross margin all the way down the stack. And then you have the big threat, kind of the fourth gorilla, the fourth Godzilla, if you will, in the block, which are these Chinese open source models. Because if you're Anthropic, and right now, you're already at negative gross margin because of the cost you have to hyperscalers, and you have a substitute that only is 6 months behind you in terms of performance, you're really going to have to run fast to make a business out of what you're doing. The battle you're going to see is going to be between the current application companies like an Anysphere, right, Cursor, and then the LLM, the frontier labs, that are going to want to move into the application layer to try and steal their lunch and protect their margin. And we've seen that now with OpenAI rolling out their agentic workflow builder, which is, I think a huge threat to N8N. N8N is a great company, just raised a great round. I think it's a beautiful platform. But if you've got to face off with OpenAI, I mean, it's a pretty formidable company. And Sam Altman has said several times, if you are doing something adjacent to what we're doing, we're going to steamroller you, because we can raise more money, we can burn money for longer, right? And we've just got that power to keep on keeping on, as it were. I think there's going to be a very, very exciting shakeout. I think your analysis is absolutely right. The ultimate value will be in stuff that is verticalized enough and has enough of a moat from knowledge and data that it can't easily be substituted by, a Chinese open source model.
And I think what's interesting, just to expand on that, though, once you get into that competitive situation, then that comes back to the old school model then, right? Because if you've got two big companies going at each other, maybe even against smaller companies, then sometimes the defining factor as to who wins comes down to simple things like, user experience. So, Spotify is always the great example we use. They didn't invent streaming. They just did it better. The whole experience was just joyful when you used it. And they added on smaller things that made you even more hooked onto their software. And in the end, they became a $150 billion company, and all the other streaming companies disappeared. And it wasn't that they had more money so much, that they were just brilliant at what they did. The product was beautiful and the user experience was great. So I think these factors will start to come into play as well as people build loyalty in these new products.
I agree. The only challenge, or the only kind of caveat to Spotify is I think they only made a margin. Was it this year? Was their first ever profit? So they were obviously doing an Uber and shoving all of the investment capital into the marketing bucket and the operations bucket. But it is a sublime product. So I agree with you. But let's stay with China. I was reading this week about some execs who went to China, and I'll give you some of their quotes. But the headline read, Telegraph headline, executives returning shaken from China visits. They've got more salacious and more clickbaity I've seen over the years. But so a bunch of these Western execs visited various manufacturing plants, including, as you said, Mads, dark factories where there are no humans at all. Some of the quotes coming out of their mouths: most humbling thing I've ever seen. Their cost and quality far superior to what I see in the West. If we lose this, we do not have a future at Ford. This isn't competition anymore, it's economic war. So this feels like a big deal. I mean, obviously there's going to be a whole bunch of colorful adjectives and superlatives when you hear these stories, because newspapers need to sell headlines. But there's a lot of reality behind this. And Mads, you've touched on a bit of this, but could you unpack a bit more for us?
Yeah, I think we've touched on a lot in the previous segments, but I think we have quotes from several execs, but I actually think Jim Farley is probably the most important of them. And the fact that he is and feels as threatened as he does, we've seen the same from the German automotive companies. They've just taken an absolute beating, and companies like BYD are really cooking, running on all cylinders right now.
And Jim Farley's Ford, right, Mads?
Yeah, he's Ford, exactly. And people will say, look, Ford hasn't been innovating for a long time, et cetera. Well, it is still one of the bedrocks of the U.S. automotive industry, and it's a huge employer and hugely important for the American economy, just like the German and European automotive companies are important for the European economy. And so the fact that the execs are going to China, seeing what's happening there, and coming back as shaken as they are, when if you'd asked them 10 years ago, they might have said, look, no hope, no chance that the Chinese will be able to compete with our quality in the automotive sector. Just shows you how far China has come. The latest numbers I saw said that BYD is outselling like the Minis and the Land Rovers in the UK now.
Yeah.
Right. I mean, that's just a huge.
I see them on the streets. Yeah. You didn't see them 6 months ago around. I live in the middle of Kent, and you didn't see them. And now and maybe I'm looking for them now, but you see BYDs everywhere.
And they are pretty cool cars, right? Yeah. There's a lot of tech in there. One of the things you ask Eric Schmidt, ex Google CEO, and he'll say, look, while the U.S. is focused on this notion of AGI and piling all the money into AGI, the Chinese sort of say, listen, but it's probably not going to be AGI. We'll just make these great open source models. They're almost as good. Yeah. And then we'll put them into everything, all the hardware we make. There is a risk that in the West, we are sort of going to be a little bit navel-gazy, and we're going to go after this moonshot project, and the rest of the world is going to be, populated by robots, cars, trucks, lawnmowers that all have Chinese AI embedded because it's open source and it's free and it's pretty.
Bring on the
good.
Tariffs, baby! Bring on the tariffs.
So yeah, there some interesting developments there. Has China won already? Of course not. We are still in the early innings here, but there's a lot of work to do. There's a lot of work to do to, the U.S. is, you could say, is ahead in proprietary models. And we have companies, we have Mistral in Europe that probably is, they're on par with the Chinese models right now. They've fallen behind, and we've work to do to catch up.
But a lot of this is robotics, right? I mean, a lot of what and where Europe, I guess, we'll talk about this maybe later. But a lot of this is the automation of factories. That's the main thing. Like you were saying, it's the application of AI and tech that has really stirred the soul for these execs. Is that fair, Matt?
100%. And we look at, if we look at the global economy, so we spent the last 50 years as a tech industry digitizing and automating all the quote unquote easy bits, right? The kind of the banking transactions, the travel reservations, the e-commerce transactions, all that stuff with nice and good data inside the data center. Whereas all the stuff that happens out in the real world, in factories, on construction sites, in logistics centers, have been quite resistant to automation. It's been really hard. We haven't had the right sensors. We haven't had the right AI models to really process the data in the way we can now. And so we're seeing this massive shift now towards physical AI. If you talk to Jensen Huang, he'll say, listen, what we're doing right now with agentic is super interesting, but physical AI, that is going to be an order of magnitude bigger. So I think, a lot of the smart money is looking there, and I think that's where the big opportunity is. And we're just going to be careful that we don't cede all of that territory to China before the race has even started, so to speak.
Do you not think it's too late?
No, I don't think so. I mean, if you reverse this, if you go back 10 years, people were saying that China couldn't build cars that could compete with the West.
I remember the jokes. Yeah, I remember the jokes about,
I mean, China was a developing, country 2 decades ago, right? I mean, you can do a lot in a short span of time if you are motivated and focused and you take the right steps. And that's what we have to do. But I think if we do that, we've got everything to play for.
Ben, what would you add here?
Well, I think they've definitely won the battle at the moment anyway, in terms of the electrical stack. Their ability to do the physical side of AI, as Mads says, is just incredible. They are unencumbered also by having to assign moral value to certain externalities that business or manufacturing can create. That does kind of hold us back in some respects, and allows them to move forward with just incredible force and progress. So, I mean, that's something that's a whole nother debate around, society in general. But they definitely have the best, electronic motors. They have the best batteries. They've integrated all of those systems way ahead of anyone else. So the physical manifestation of AI is at the moment definitely in their court. But as Mads says, I'm positive. I think we can come back, and the US is obviously on a roll in many respects too. So it's interesting. It'll be interesting over the next few years to watch what happens.
So what can we do? I mean, I remember when we were talking about doing this pod, I wrote down the US has the money and China has the real applied tech. So US has the money, foundational models, AGI push, and all the stuff that you mentioned, Mads, but China is actually doing the do. They're doing the hard stuff at the coalface. But what should we do? And just for some context, before we dig in, I was looking at JP Morgan. Now, they've launched their Security and Resiliency Initiative, which is a 10-year, $1.5 trillion plan aimed at supporting the US in key industries over there. And that's a single US bank thinking like this. So what can we do? Where can we do it? And this is the last topic, so we are going to end on an upside. Otherwise, I'll shoot everyone in the face. But Mads, where would you start?
No, I mean, I think just huge respect for Jamie Dimon and the powerhouse he's built at JP Morgan. And I think it's a fantastic announcement he's made. Now, what is it actually? It is, well, it's, mobilizing 1.5 trillion for investment into these 27 key industries. So it's $10 billion directly from their own balance sheet. And then the remainder mobilized from their incredible group of clients through lending, underwriting, advisory work. So we'll put some money and we'll prime, and then we'll use the breadth of our business to bring in that 1.5 trillion, mobilize the money to bring it to the businesses, to the founders, to the entrepreneurs, to the projects that can use this capital productively to push the US economy further ahead. This is what good entrepreneurship is. So I think that's very, very exciting. We sometimes say that the US has got the money, but I think the truth is there are trillions and trillions of capital in Europe. I think today we're just tying it up with the wrong stuff. For better or worse, and probably actually for worse, we've been funneling that into a We've allowed ourselves to grow a welfare state that's become incredibly expensive. We're running all these losses all the time. We got to finance that. So governments, they go to pension funds and say, give us your money. And so the poor pensioners are lumbered with all these government bonds that give almost no returns. And you have this vicious cycle of, keep running deficits, spend more, borrow more. Pensioners get, low returns. So you need to put more into your pension because the returns are so low. So you get much less out of it. And so it's a negative spiral. But negative spirals can be turned around. And if we start to funnel that capital differently, funnel more of it to productive use, to real businesses that can grow stuff, probably need to trim a little bit back on some of the welfare spending we have today, means test some things, think more carefully about, where do we spend, how do we apply things, right? So we can free more resource up to invest in businesses that can create the wealth for tomorrow and for the future. I think, again, everything is here to play for. We know the talent is here. We know there are amazing people. We know a lot of the people that go on to build great tech companies in the US, they come from Europe. And we also know that if we had more funding here, more of them would stay here for longer and build bigger businesses. So, yeah, again, I'm certainly optimistic. There's work to do, but again, that's why we're here.
Ben, what would you add?
I'm also, I'm also feeling good about it. I think that we know the problems. We know that institutional capital in Europe and in the UK isn't coming into the growth sectors where we need it to be. But I think the willingness is there. I was at a conference in Scotland.
It does feel like it.
Yeah. I was at a trustee conference in Scotland, and lots of trustees of pension funds there were super, super interested in what we were doing. The willingness was there. I think they realized that when they're supporting their pensioners through, good pensions and good amounts of money into their old age, they also want a country that is competitive for the pensioners' kids and, for their jobs to be there for the whole country in general. So it's not just a monetary thing for pension funds. And I think the trustees are seeing that. There are some problems to be ironed out, of course, but the fact that we've stayed in the same league, I hope we have, as some of these big players like the US and China, with the big difference in capital that we have available to us, shows the amazing resourcefulness that Europe has. And that comes back down to the academics and the institutions and the entrepreneurial spirit. So all the pieces are there. We just need to unleash that capital at the early stage, and even more so at the growth stages, which is what we're trying to do at GP Bullhound. But I'm very bullish. And I think in the long run, some of these kind of societal issues that have perhaps held us back, and that have allowed places like China to push forward so aggressively, may start to come back and be an advantage for us. As that middle class grows in China, will they be as hungry just to go out and work and not think about personal freedoms into the future? Maybe they will start to change their opinions, and the rule of law and decency in general of Europe might be a place where people want to be based, and the good things about European society in the long run might win out. I hope so.
I mean, let's face it. China is a society with its own problems. They've got massively structural problems around demographics. They got problems around. So their strength is also the weakness, in the sense that one of the reasons why they are so competitive and they can channel so much capital into investment is because nobody spends anything. So people are generally not spending, they're saving, meaning there's just not enough consumption domestically. And therefore you're reliant on exports to fuel growth. And so, absolutely. I mean, one of two things is going to happen. Either Chinese consumers at some point will wake up and they'll start spending more, especially as they age. People can't work forever.
They're starting to encourage, aren't they, Mads? The Chinese government is trying to get more.
They've tried to do that for a long time with very limited success. But again, it's hard to imagine 85-year-olds, working, 12-hour factory shift. I mean, at some point, the demographics will force a shift. It's going to happen. It's inevitability, right? Demographics are destiny, as people say. The other thing is we are going to see a rewiring of the international trade order. People can argue about Trump's approach and some of the means he's using, but I have no doubt that if we look kind of 10, 15 years into the future, the global trading system will look different from the way it does today. So I think some of this stuff naturally, as Ben, as you're saying, will change. It's a matter of time.
I'm always intrigued as to what is going to be a cultural shift, as to what is going to be a commercial shift. And my sense is there are going to be many more cultural pushes for this new world realignment as much as there are commercial pushes, but we'll see. Right, we are nearly out of time. Mads, you have a deal of the week. What is yours and why?
It's a super cool Swiss company. It's physical AI. It's ecoRobotix.
Robotics.
Exactly. They've just raised a 90 million euro Series D led by Highland Europe and our friends over at McWin. And essentially, it's precision spraying robots for agriculture. So super cool stuff, kind of cameras that scan fields and AI that identifies the soil and crops and weeds in real time. And then make sure that the robots, they only spray where needed, which can reduce the herbicide and pesticide use by up to 95% while still giving as good or better results. So something that's both economical and sustainable. How about that?
That sounds very zhuzhy.
Yeah, absolutely. Operating in 20 countries already, and I'm hoping they'll go much, much further because it's a great business.
Well, there you are, landing on physical AI. What could be better? Gentlemen, thank you so much for your time. You've been listening to Upside, and we'll catch you next week.
See you in the next one.
Upside!